What's up, y'all? In today's video, we're going to answer the question, do you have to give yourself a salary if you own an LLC? Check it out. What's up, y'all? My name is Saluto Uba, and I'm the founder of the Uba Law Group. We're a law firm that makes the legal side of business easy to understand so you're not scared out of pursuing your dreams. Now today, we're going to answer the question, do you have to pay yourself a salary if you own an LLC? Now, before we get into that, I want to ask that you hit that like button, that subscribe button, share this video with anyone you know that could use this information. Now, in order to answer this question, you have to understand how your money is taxed and how it's seen by the IRS. So when you own an LLC, you're known as what's called a disregarded entity or a pass-through entity. And all that means is whatever profit or loss you make in your business passes through your business and goes directly to your personal tax return. So your LLC is going to create what's called a Schedule C, that's a tax document, and then that Schedule C is going to go onto your 1040 personal tax return. So here's the big idea. When you're the owner of an LLC, even if you never pay yourself a salary, all the profit that you make in your business, you're already going to get taxed on. We just talked about the idea of a pass-through entity, so here's an example to help you understand what we're talking about. If you have an LLC and you make $100,000 in profit, your LLC tax documents are going to show $100,000 in profit, and that 100K is going to pass through to your personal tax return. So at the end of the day, on your personal taxes, it will show $100,000 in taxes. Therefore, you're going to be taxed on $100,000 worth of income. So here's an example that'll make some things clearer. Let's say you have a business and last year you made $100,000 in profit. So whether or not you take a dollar out of your business bank account, your LLC tax documents are going to show $100,000 in profit. That $100,000 is going to pass through to your personal tax return, and your personal tax return will now show that $100,000 in profit. So accordingly, the IRS is going to tax you on that $100,000, whether you take a dollar out of that business profit account or not. The IRS sees your LLC as the same as your personal taxes. It's called pass-through taxation. So whether you take a dollar out, you're still taxed on that amount. So this answers the question, should I take a salary? Should I not take a salary? Is that going to create a benefit? No, it's not going to create any benefit. Because when you're an LLC, you're taxed as a sole proprietorship pretty much. Whether you take a salary, whether you never take a salary, whether you don't touch any of that money, whether you use all of that money, you're still taxed the same. Your LLC tax documents will show whatever amount of profit you made, and that profit is going to be allocated to your personal tax return, and then you're going to be taxed on that personally. So don't listen to anybody that says you can avoid taxes by keeping the money in your bank account. All that's going to do is have you lose value of that income as inflation eats away at it. Make sure that you're paying yourself properly, make sure that you're putting money away for taxes, and also make sure that you understand how the IRS sees you and your money and you're strategizing accordingly. Well, that answers that question. If you have any other questions that you would like me to answer, please feel free to drop them in the comment section. Like I said, please hit that like and subscribe button. And until next time, keep on grinding, keep on hustling. We'll see you in the next video. Peace.